Hello everyone. This is the pre-market report video for today, 11th September 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday in the initial hour, Nifty traded flat, but with the help of IT stocks and Airtel, it again crossed and closed above 25,000 mark. Regarding IT stocks positivity, obviously Monday night US market positive close and increased US rate cut probability is the prime factor. So the whole IT sector was open to positive around 0.5%. Then at 10:30 am, one of the world's biggest asset management company, Bernstein, released the report that TCS and Infosys were their top picks in the IT space because of their AI capability, and also they maintained the outperform rating for both the companies, which in turn increased the whole sector to near 2%. And if you see the top Nifty positive contributor, Infosys and TCS were the second and third biggest ones. Then about Airtel, their subsidiary digital arm Airtel Finance, with a partnership of some NBFCs and small finance bank, they launched the fixed deposit scheme with an interest rate for around 9%. So basically, Airtel subsidiary expanding their footprint into the financial sector, which in turn made the Airtel stock price to increase about 2%. Other than that, in the last pre-market video, we discussed about the GST council meeting, like pharma was positive, and regarding insurance, it's neither positive nor negative like. So in response to that, market reacted positive for the pharma sector, no surprise there. However, because of the disappointment in the insurance space, HDFC Life Insurance was the top Nifty dragger. Then in addition, SBI Life Insurance, ICICI Prudential Insurance and all the health insurance related stocks all fell substantially. Again, in response to that, it did affected the entire Nifty and for some extent their parent stock price as well. Hence, basically Bank Nifty underperformed Nifty. However, to my surprise, yesterday LIC actually increased. Anyway, sector-wise, Nifty, oil and gas and PSU Bank were the draggers. On the other hand, media, IT and pharma, those three increased above 1%. In addition to all this, yesterday AMFI, Association of Mutual Funds of India, released the overall mutual fund data. As per that, the total assets under mutual fund increased to 65 lakh crore rupees, and for the 42nd month in a row, mutual fund added money into the Indian equity space. Here for August month alone, Indian mutual fund invested around 38,000 crore rupees in the Indian stocks. If required, please pause and have a look. This is where those 38,000 crore rupees invested, and the major chunk went on to sectoral or thematic funds, meaning either related to sectoral related fund or to the exchange traded funds like Nifty. This is a huge positive data. I mean, with this data alone, in the last 3 months, mutual fund added over 1 lakh crore rupees into the Indian stocks. Overall, 63% of the stocks advanced yesterday and 33% declined. About institution, based on both NSE trading data and NSDL data, for the second day in a row, FIs were net buyers. As per NSE India website data, the net bought for 2,200 crore rupees, and as per NSDL data, the net bought for 1,134 crore rupees. On the other hand, DI net sold for marginal 275 crore rupees. So those were the quick takeaway from the Indian market. Now let's look at the US market. Last night, OPEC countries released their monthly report, and in that they cut 2024 oil growth demand to 2.03 million barrels per day from earlier 2.11 million barrels per day. As a consequence, oil price crashed further by 3%. At the time of this video, WTI crude trading around $66 per barrel and Brent crude was trading around $69.5 per barrel. Hence, because of this poor oil price, which in turn affected all the oil related companies in US. So Dow Jones alone closed negative 0.23%. However, low consumer inflation data expectation made the S&P 500 and Nasdaq to close positive of 0.45% and 0.85% respectively. About VIX, it dropped by 2% and decreased to near 19. In line with the US market, both the IT areas closed positive, and even if we calculate the arbitrage, both of them still indicating 0.5% positive compared with yesterday's Indian market closing. However, both the banks closed on the negative note and the arbitrage indicating a negative 1%. Hence, from ADR perspective, IT stocks still have some positive run left, but banks looks weaker. Regarding the reason, we'll discuss in a moment. About GIFT Nifty, early morning today it closed at 25,115. Equating with the spot market, it's indicating the flat opening with a positive bias. So those were the things happened yesterday. Now let's discuss the new India related info. First, regarding banking negativity, as per yesterday's Finance Ministry official statement, on behalf of FATF, they proposed a new more stringent disclosure norms for the credit card transaction. Here they said they want this stiff disclosure to prevent the money laundering. However, this expects to increase the bank's operating cost, which they cannot able to pass it to the consumer. So that's the first negativity. Then second, yesterday in the aftermarket hours, RBI imposed the penalty on both Axis Bank and HDFC Bank for not complying the RBI rules. Here the fine amount is minimum only, but because of being non-complying, sometimes that will influence the stock price. Hence, I'm guessing because of those reasons, banking ADR were negative last night. So let's hope it will not affect much on the Indian market. Anyway, then regarding Reliance, their retail segment business formed a JV with Israel-based garment brand called Delta Galil. So we can expect Reliance Industries to be on focus. Moving on, in addition to this, Oil India and Maruti Suzuki also expects to be focus, as Oil India signed a MOU with various oil production companies across the globe for cooperation regarding the critical mineral supply chain. Whereas on the Maruti Suzuki case, they said they expect to launch 500 km range electric vehicle, which they are working at present. As a summary, though Dow Jones closed negative, we can consider the global momentum as positive since both S&P 500 and Nasdaq closed positive. However, there are some negativity around banking stocks. So for now, GIFT Nifty is indicating only a flat opening. Regarding the things to look out, probably this video releasing time 7 a.m. US presidential election debate is scheduled between Trump and Kamala Harris. So as I said in the last pre-market video, if Trump performance better means probably market might take that as positive, and if Kamala Harris performed good means I think market will react negatively. But it's just my opinion, I can be wrong. Either way, that's the first thing today we need to understand. In addition to that, 11:30 a.m. UK GDP data and at 6 p.m. US consumer inflation are some of the items we need to keep an eye out today. If anyone trading in oil, then they might need to keep tab on US weekly crude oil inventory data as well. Coming to technical, Nifty opened 60 points gap up and increased above 25,100 mark. However, final hour selling erased some of the intraday gains and closed above 25,000. Thus on the daily chart, a small bullish positive candle was formed with medium upper and lower shadow, which looks like doji pattern but not a classical one. However, some momentum indicators like RSI still have the bearish bias, which is indicating some weakness. Hence, in the near term, unless Nifty managed to close above 25,100, we can expect the sentiment to stay weak. And on the lower side, support is at 24,900. If it breached, Nifty may decline further towards 24,750. In case of Bank Nifty, it opened 210 points gap up, and throughout the day, it was in range bound and closed at 51,270. Thus, on the daily chart, Bank Nifty formed a doji candlestick pattern, which is indicating the indecisiveness between buyers and sellers. Basically, Bank Nifty is facing resistance in the zone 51,400 to 51,500. Hence, from short-term perspective, in order to be positive, it's crucial to surpass the resistance zone. On the downside, 50,900 to 50,800 will be the crucial support. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,200, with maximum new call option writing at 25,350 strike, and then 25,400 and 26,500. On the put side, the maximum open interest was at 24,600 strike, followed by 25,000 and 24,800 strike, with maximum new put option writing at 25,000 strike, followed by 24,600 and 24,700. Thus, from options data, 26,000 is the immediate resistance with support at 24,600 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I am doing this for me and viewers' educational purpose only. Thanks for watching.